Hey everyone! Okay, so I know some of you might have filed your taxes, some of you might be waiting until April 15th or possibly extending, but no matter where you fall on that scale, there are a lot of things that people don't know you can deduct, and some of them are kind of weird and strange, but they might apply to you. So today I thought on our video we would talk about the top 12 most missed tax deductions that are out there, and more than likely you could probably use at least one of these to give you more money back on your taxes or help you owe a lot less. Either way, let's get started and I'll show you guys what those most missed tax deductions are. If you guys didn't know, there's a little eye with a circle kind of over here that you can click on at any time and it will help you subscribe to the Melea show here. And it will also let you know of other videos you might be interested in. So if you see that little eye by hovering over the screen here, that will pop that up for you and then you can subscribe. You don't want to miss all these crazy and amazing money saving tips. Okay, before we get started, I'm going to put this disclaimer up right here. I'm going to tell you what's available out there, but you guys have to do your due diligence and talk to a tax professional or an accountant or someone to make sure that you're not just writing off random things and the IRS isn't going to come back and audit you, because we do not want that. You can only write off things that actually pertain to your family situation. If you don't already have a tax person, I have someone that I totally love called Elevation Tax, and I will put their information down below in the YouTube description. If you're filing something super simple, like a 1040 EZ, there are a lot of places that will just let you do that for free, like through TurboTax or Tax Act or all those places. It's once you get into the bigger deductions that you have to pay for those types of filings, or you might need help from a professional. Okay, here is the first deduction. When you think about charitable donations, you think, oh, I donated a bunch of stuff to Salvation Army, so this is about how much it was worth, right? A lot of people don't know you can write off things like mileage, driving to and from charity events, or volunteer things that you're doing. You can also write off ingredients or items that you need to buy for those types of events. So if you aren't sure, you'll need to double check with a tax consultant, but more than likely you've totally missed a lot of those write-offs. I know a lot of people know that they can write off Childcare Credit if both parents are working, but did you know that you can write off the summer camps, the sports camps, all of those types of extracurricular activities that are considered a camp? Because if both parents are working, that is technically a daycare or a childcare type of service. So more than likely you can write those off too. Another overlooked deduction is state tax from last year. If you had to pay taxes to your state last year, you need to make sure you put it on this year's taxes so you can get that deduction too. Okay, did you guys know you can actually rent your home tax-free? For reals. So you can actually rent your house up to 14 days every single month and you don't have to disclose that income to the government. Crazy talk, I know. So if you want to put your house up for rent on VRBO, on Airbnb, or on HomeAway, any of those popular sites right now, you can do that up to 14 days a month and you won't have to pay any tax on any of the income you earn. Okay, the next item I want to talk about is energy saving upgrades. You guys probably know about this, but a lot of people forget about it. So think about during the year, what did you purchase or what did you upgrade in your house? Maybe it was more energy efficient windows, maybe you put in extra insulation. Any of those things that are considered energy saving costs, you can actually write off on your taxes. So don't forget those, or plan on doing something in the next year so you can get those write-offs. So I know not everyone has a blog or a YouTube channel or whatever, but you might have an Etsy business or sell something out of your home, or maybe you have a family business, or maybe you're an Instagram influencer, or whatever it is. If you have some sort of business, you can actually pay your kids and your spouse a wage, which is awesome because guess what that means? It means you get to write it off. This is something I do with my own kids because I use them as models. You've seen them all the time. They're in my videos, they're online, they're on all my social media accounts, so I pay them a small fee to be used as a model for my business. And then I get to write it off. It is awesome, and all the money that gets paid to them just goes in the savings account and they can use it when they're older. Okay, one of my favorite tricks for saving money on your taxes is actually opening up an IRA or a health savings account after the year is over. A lot of people don't know that from January 1st to April 14th, you can actually open up a health savings account or an IRA after the year's already up. So if you go through and start doing your taxes and realize, oh my goodness, we owe so much money this year, instead of giving that money to the government, you can actually decide to open up a health savings account or an IRA, put it in there instead, and you'll either have a retirement thing going, and that will be, you can pay out to yourself obviously when you get older, Or you can put it in a health savings account and then use it for the upcoming year on things like LASIK surgery, on things like medical bills, regular surgeries, all that kind of stuff that falls within that. So if you want to do something like that, the maximums change every single year. So you want to just do the search online to the government's website and get more information. But you'll have until April 14th to actually open up the health savings account and put the money in there. If a doctor has told you that losing weight is totally imperative to your health and you have to lose weight, a lot of times you can actually write off a gym membership. You can write off any of the items you need to get in shape, like weights or a workout gear, or any of that kind of stuff too. So if that pertains to you, you might have to actually provide a doctor's note with your taxes, but that could be a really great way to save extra money if you do have to lose weight because of your health. Going along with the medical thing, another thing that you could possibly write off is the rehab facilities. So you guys know the drug rehab, alcohol, or even like smoking, things like that, you can typically write off. You guys probably know how expensive some of those rehab facilities are. I mean, like tens of thousands of dollars. So a write-off like that obviously would make a big impact in your taxes. If you've gotten a new job this year and you have moved more than 50 miles, there are so many moving expenses you can totally write off. So not just the moving trucks, but gas mileage, any transportation, storage costs, any of that can actually be written off. Okay, the last thing I want to talk about has to do with mortgages. If you own a home, you know that that is the biggest write-off you'll have on all of your taxes. So a lot of people know you can write off the mortgage insurance, but most people don't know you can write off the mortgage premium. So if you've paid a mortgage premium, you can write that off on your taxes, do not forget. And along with that, if you've refinanced, you can actually write off any points that you paid at closing. Okay everyone, I hope you guys learned something new. I'm pretty sure at least one of those things you didn't know or totally forgot about. So use those on your taxes this year, and I will talk to you guys next time. See ya!